correctly.
Test, test, test.
Somebody asked me what a certain line was, and I didn't have it explained.
Test, test, test. Test, test, test.
Yeah, we should probably talk, Jeff, on different things a little bit, but not now.
I'm pretty open tomorrow. My schedule since the conference has been just like crammed, and then all of a sudden, like I got so much work done today. It was awesome. So, like, if you wanted to kind of touch base
I
tomorrow, it'd
did
be
get
good
some
for
subsequent
me.
communications regarding what's going on after that voicemail. So I think if I understand correctly, I'm just waiting for the adjuster, you or Eric, I guess, to tell me what amount you're going to be giving us for the total, what do you call it, the totaling of the vehicle.
Hold on just a second. I'm going to yell at Kelly that his mic's on YouTube. Oh, maybe it's not him. Hold on. Oh, yeah, I have YouTube. Okay, it's not him. Okay. I can hear you typing.
Yes.
I thought it was Kelly's mic
It's
was
not a car, it's
on
a
YouTube
trailer.
because he started the YouTube broadcast part of things.
Oh, what
Cool. And yes, we can see Medicine.
Okay, hold on.
The towing company reached out to me, and said, which kind of put me off guard because
Okay.
why are you towing my car?
So let me get back to where I was.
But then I've had
Slideshow.
subsequent things saying they're going to.
And you said, Jeff, I just have to, this is only my third webinar I've ever done. Over 160, 170 live events, but only this is my third webinar.
Oh, okay. Because I was like, you actually came off really good. We were impressed by your presentation.
Well, you have to say that now to get me, to get me confident. Work up your speakers. That's the way to do it, Jeff. You're a
Of course.
professional.
I did not know that.
I completely understand.
But
I just can't think
I
of the
don't
word.
really badmouth people.
You're not
very
repairing
much,
it.
So,
Oh, well, then.
Choosing to replace it.
Rip 'em
Repair
out.
more
I feel bad when I'm telling
The
people,
concept
but
I understand.
even
I just couldn't think of
criticism
how to say it.
to find people can
I'm sorry.
in that respect.
So what
I
is
am
the
going to
amount you're-
pull the webinar
you're,
back,
reimbursing,
and
paying
just so
out
that I
for
can
the
start sharing my screen.
trailer?
And I'm going to start the broadcast if you're ready.
Okay, right, and you said something will pop up
Okay.
on the screen, and I just say, I click.
Okay. Now,
What was it?
you,
Here we can do it
very
again.
quickly after I put in
show my
claim,
screen.
said you sent a
I'll
check
do it
for
again, just so you can see
$5,000.
exactly what it is.
We never received
Go
Go ahead
that
and make you
check,
the presenter.
so I don't know if
After you say yes,
you're going to want to
I
take
click
that
no
out
and it says
against
start
that
broadcast. It
amount.
won't pop
But
up
we
that
never got
second
it.
dialogue.
Oh, yeah,
Done.
show my screen. Let me see if it held it. It held the default. Okay,
Yeah.
gotcha.
It's pretty good. Go through webinars. Pretty good, really.
Okay.
We've been pretty happy with it.
Also, what is
Let me do
can
this.
you
Let me go
confirm my
ahead and
mailing address because we have
Presenter
to
again?
Texas.
Okay. Anything you say from now on is going to be heard. So hold on. So here we go.
The broadcast is now
Livingston?
starting. All
Yep, we're in
attendees
this
are in
area.
listen-only mode.
Yeah, that's where we are.
Hello, everybody. It's Jeff Gibby with
4109
Metastack. I hope you're doing well. I've got,
Callan, Texas.
depending on your view, I'm not sure if it's here or here, but I've got Ray Rondo with us. We're going to kick off in just a
I
few
did not
minutes.
receive it.
Looks like we've got about 4 minutes for getting our YouTube live. Now my camera got a little fuzzy. That's interesting. But in any case, we're going to start in just a few minutes here.
Well, I'm not
welcome to the
concerned that we
room.
didn't. Yeah, I just want to say we didn't get it.
happy.
We
And
didn't
we'll
catch
see
it. You
you
see that
actually
it's been
inform it.
processed. We didn't do it,
All right.
and we didn't want it to come against the settlement amount under the assumption we'd already received it. So if you can just cancel that out, that's fine. I have no problem with that. If we get it, I'll just destroy it. Well, that's another question I have is, I'm assuming you're going to keep and salvage the trailer after you give us that amount. So you take the trailer, right? We don't I guess it's now in your possession. or will soon be. It's approximately 50. We put quite a bit down on it, so yeah. Oh, so you pay the bank directly and then just pay me the difference? Okay. Okay. So what do I need to do now? I've already done that with the dealer. The service center where it's at said he said it didn't be a problem, but he said that you would still need to pay him his estimating fee before he could release it. And I said that's between you and the insurance company. So.
Hey, Jeff. Coming
sorry,
over
he
the
said
YouTube
again,
side.
I'm
Just want to check to make sure you're ready to go. We've got about 45 seconds to go.
We're ready to roll.
Okay.
Let us know when we're
when
live. All right, thanks.
Thanks.
Okay, that's great. And am I going to get some sort of email or something with all this in writing? No. Is it a letter or an email? Okay. I haven't seen that. I checked my app earlier this morning. I hadn't seen any update. I haven't seen an email, but okay. Okay. Okay.
All right, Jeff, you there?
I'm ready. Are we live?
Okay, we are all set to go. We're live on YouTube. You look good. You sound good. Let's go.
All right. So, hey, everybody. Jeff Gibby over at Metastack. Hope you're doing well. Thanks for joining us tonight. It's good to see you. If you're watching this in the future or on YouTube in general, just be sure to like and subscribe. We do a lot of really cool videos around the market. And it really does help the channel a lot. Helps us get the word out, and we really do appreciate it. So be sure to say hi as you come in.
Well,
It's
I
good
think
to see you.
that does
Anyway,
it then.
it's Jeff Gibby. I am really just going to read a legal disclaimer and introduce you to our guest tonight. So let's go ahead and get that underway. Today's demonstration is designed to instruct you on using Metastock and the company's software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So, you enjoyed that. I do want to introduce our first guest, Ray. It's somebody that I've known for a number of years. He's a really, I consider him a friend, but he does a really good job. And the thing I really like about Ray is he's really got a very, very good attention to creating methodologies, particularly system design and methodology. He spends a lot of time looking at testing, results, graphs, and he's a prolific system designer. I know he's given over a couple hundred talks. Well, he says 160 plus. Given hundreds of demonstrations and stuff like that. But he's one of our. He's a super like I said, good system design. It's always really, really good to bring these up.
The truck or the car, one's 50,
Hop in the channel. So, Raymond, welcome to the room. How are you doing today?
Good. Thank you, Jeff. Thanks for having me.
I'm good. I just sent a note through, or a request for your webcam. I did turn off your webcam during the intro. So, and I'm going to send the presentation through. So make sure everything looks good and sounds good. I can see your webcam. And and then I'll let you know as soon as we can see your screen, and we'll let you kind of take it away. Perfect. Hey, that's the same side I just. All right, very good. We can see you, we can hear you. It's all yours, Ray. Let me know if you need anything. I'll be here if you need some help.
Thank you. Well, welcome to today's presentation, Trade with Conviction, I believe we titled it. And I'd like to thank you for attending, and Jeff's introduction, of course. He does a great job. This presentation's primary focus is on the concept of conviction, its application, and of course its validity. And we're going to tie this in with our lead. Are trading strategies with a hit rate of 85% and a profit factor of 2 to 1 realistic? And more importantly, is there evidence to back this up? The presentation has 2 sections. It's only about 35 total minutes of formal material. In section 1, we're going to focus on factors and system design and how it relates to conviction. And in this section, we're going to explore 5 methods to improve any system's results, including the conviction system. In our second section, we're going to go to the foundational aspects of basic volume theory, and then expand that into the concepts of conviction. Specifically, we'll explore the indicator RCM, relative conviction momentum. We'll cover why these conviction indicators are certainly better than first-generation indicators like OBV and Chaikin's accumulation distribution, and how they adjust for high-frequency trading and dark pool activity. We'll look at their construction, the theory behind them, how to interpret them, and specifically what signals are most relevant and which ones are actionable. In this workshop, we're going to cover these areas relatively quickly, and if you don't get it all, please keep in mind that we supply full educational classes on Conviction Plus free of charge. These classes include studio-grade screencasting presentations, additional resources, slides, tools, testing, there's credits, certificates of completion, and extra AI benefits for those that pass the classes. If you're interested in these and you want to learn more about this class or any other class we have on a variety of investing topics, you can go to www.aai.com/VES. If you get Conviction Plus, you'll get the links to these classes automatically by email. In addition to the classes, for those that want to incorporate conviction into their trading or investing, we will also provide you with additional AAI instruction guides, and these are in addition to the MetaStock versions. These guides cover how to set up the indicators, how the indicators are calculated, how to interpret them again, their pros and cons, where they work well and where they don't, how advanced investors can adjust parameters to contour the indicators to their own style. We give a definition of each field in the commentary reports. And again, we show you where and when to take the best signals. And we even take this a step further, and this is a big step further. We give each Conviction Plus user detailed performance reports on all 3 of the trading systems. And the Conviction Plus has 3 trading systems with it. There are literally dozens of field of data provided. Here we can see a table. These are not the actual reports. Okay, this is just a table showing the actual back-tested results of one of the Kinetic Conviction profit target systems. And this is measured over 10 years on every stock in the S&P 500. Highlights on this scan or system include an 80% hit rate with a 3.3 profit factor, a non-compounded return of 2.6% per 27 days, and a noteworthy maximum consecutive loss at only 2. In this study, this system never produced more than 2 losses in a row over 10 years. So why do we do this? Well, one, AAI is a nonprofit educational provider for over 40 years, with our sole purpose being to assist individual investors by producing evidence-backed research and tools. We're in search of truth, and we take an analytical or academic approach to indicator development and system design. And we provide each investor with the detailed statistics on every study so then that they can make an informed decision if or which systems might be best for them. In fact, each system performance reports list the details of every single trade, so an investor can confirm and correlate the reported signals on their charts. Why detail every trade and let each user confirm this in the Metastock platform on an issue-by-issue basis? As you know, because numbers can easily be manipulated to show unrealistic returns and expectations in specific selected categories. And there are multiple ways to do this with confirmation biases and survivorship biases, curve fitting, data mining, outliers, and recently so-called advanced AI systems that are currently no more than curve fitting on steroids. To advance reported results, for example, this is the equity curve of the profit target system. And again, these are included as part of the Conviction Plus package. You'll get the equity curves. And although past performance is never a guarantee of future results, our primary focus is not necessarily maximizing profits, but risk control. And because of this, we tend to design systems to work in multiple market environments. In fact, this system did not have a losing year, including during COVID, out of the last 10. And system strength and weaknesses are important considerations for selecting the correct system. Again, this system prioritizes risk and consistency of returns. Some of the other systems do weight maximizing returns more, but never at the expense of risk. This is opinion. This is an opinion slide, but I think it should be stated because it's important. When considering a system, I would strongly encourage you to always program and backtest a system, no matter how well-intended developers' intentions. A statement like, it happens 95% of the time, and I know this based on my years of experience, is not evidence-backed. And although backtesting is not perfect, performance results and being able to confirm detailed trade logs are something that you should require at an absolute minimum before ever considering a system. We're talking about real potential money on these systems. A little more on our approach and system design for the conviction tools. We backtested individual parameters over long periods of time on multiple securities. We create thousands, if not 10,000 of iterations. Repeat on multiple securities. Results from a handful of securities tell us or you really nothing. And we like them to work across multiple market environments. These are some of the base criteria for establishing a factor. So for these studies, again, we attempted to isolate factors, the foundations of any system, and we backtested on every single stock in the S&P 500 over a 10-year period that ended the first quarter of 2023. And we assume entry on the opening of the following day's signal. We wanted to be realistic, and we invested $5,000 every time. Now, here's a small excerpt of the conviction results. And I know we haven't defined conviction, but for now, just think of conviction as dollars exchanged in a day on a security. Now, notice here, notice how every time we increase the conviction factor right here, going from the top to the bottom, the number of trades decreased, as we would expect, because it was becoming more restrictive. But notice how the average trade profit, the K ratio, and the total return to max drawdown results almost universally, step-by-step, improved across the board. And higher values are better here. And if you don't know what the K ratio is, just a measure of the consistency of return. And this is what we're looking for. We're either looking for linear relationships or some type of Gaussian distribution curve where we see a fluid amount of returns. After establishing the potential of conviction as an evidence-backed viable factor, we then take these and combine them with other factors that we establish by the same methods to enhance their related strength and reduce their weaknesses to create a good system, or in our case, the conviction systems. In fact, with the conviction scans, there are 7 factors within each system. To illustrate the importance of combining factors, we took one factor out, and we're going to show you the results of that, and that was a gap. One of the factors that was included in the systems was a gap. If you were to use simply gaps alone with the exact same study parameters, your back-tested results shown at the top, at least in this study, would not be satisfactory. The difference between a 58% hit rate and a 1.92 factor to an 80% hit rate and a 3.3 profit factor is a chasm. In our most recent bear market, the straight gap strategy would have lost approximately 14% peak to valley, as opposed to a 2.6% peak to valley worst case scenario for the conviction PT scan. And obviously this is the reason why professional traders, and I'm sure most of you, don't try to trade straight gaps without synergizing other characteristics and measurements, because they simply don't work that well. Lastly, because of the significant limitations of backtesting and our cautious approach, it's critical to understand that it is highly likely that the reported performance statistics for the systems are being significantly understated. And we do this purposefully. Most traders and investors should easily be able to improve the reported baseline systems performances in the studies that we give you. In fact, in some cases, you don't have to do anything. So in finishing section 1 here, I'm going to cover 5 ways to improve baseline system performance, and these can be applied to any system, not just the conviction systems. First one, these conviction studies and systems don't include dividends, which would greatly increase your returns. Studies show that 40% of the total return of the S&P 500 are dividends. That was our study group, every component of the S&P 500. Performance was only measured on price appreciation alone. And when you add back in the dividend amounts, not only would this increase returns, but many of the conviction systems reported small losses that you can see right here would have turned into gains, increasing your hit rate well over 80% of the reported figure. The second way, there's no market timing mechanisms with these systems, which is absurd. The systems take or show entries even in obviously bad times. Don't do this. You wouldn't do this, right? We don't fight the tide. In fact, we do have a market timing mechanism coming out, Metastock in the fall, that can be overlaid with this system or any other systems. Third, other technical elements, of course, right? Scans are built from systems that are designed for research purposes. With the scan's purpose for identifying securities that meet the system's criteria and to reduce a large number of securities down to a manageable size for further evaluation. Even someone with modest trading or technical analysis skills is going to be able to filter out the bad setups, improving performance results. Fourth, these systems did not incorporate fundamentals. And anyone who gets Conviction Plus package will also get a complimentary 1-year membership to AAII, and that includes some excellent fundamental scan tools, as you see here. This video shows the philosophies of some of the world's all-time greatest investors in scans. My favorite here is the MyScreen scan that shows you the individual stocks that meet the most fundamental criteria scans that appear in the largest number of scans. For some investors, the integration of fundamental stock selections at some level is an area that could improve performance. The fifth one, money management. One, compound interest. For this system, we did not reinvest the returns. We stayed at $5,000 per position. Reinvesting the profits would have greatly enhanced the overall returns over 10 years. Also, these systems were primarily developed to education and to identify strong conviction-oriented setups. By incorporating money management techniques like moving stop losses up to assure profitability when you're in the money, or scaling out of your position, say at 50%, when you hit your first profit target, which is the one generated by the conviction system, you can simply let your profits run, increasing overall returns. And here you can see 2 conviction trades where profits could have been extended, with an approach like this, just using basic trend analysis. So them are the systems, and that's a little bit of system design and how we develop indicators and some of the components that I would hope that you would all consider and incorporate when you're developing your own system, or at least understand if you're going to use somebody else's system or evaluate somebody else's system for validity. So now we're going to turn to conviction, the concept of conviction and what it can do for us. And this is our second section. The indicator that we're going to look at today is relative conviction momentum, or RCM, and it's one of 3 conviction-based indicators that are part of the Conviction Plus package. Relative conviction momentum is a volume-associated indicator that's plotted in the same area as standard volume bars in the lower chart pane. You can see an example here, and although it may look like volume, and its primary focus is to assist investors with evaluating trend strength and whether a trend is likely to continue or reverse, RCM has some very important differences and distinct advantages over volume itself and the first generation volume-based indicators that they were derived from that were literally developed 40, 50, and 60 years ago. We'll start with volume in case you're new. We're going to go through this quickly. If you don't know what volume is, it's simply the number of units, shares, or contracts transacted in a given time period. And we display this amount in a bar on the bottom of a chart. And to keep this simple, our charts today will always be a day. Here we can see an example of some daily volume bars, and the amount of volume is represented by the height of the bar. And volume bars are normally plotted as a single color, or they can be plotted as 2 colors, red if price finishes down from the open, and green if price finishes up from the open. These are just some basics. We're going to move quickly through this. An important point here is that volume and conviction, as we will see, levels are only relevant to when compared to the issue, historical levels. The levels are not absolute unless you're using them for liquidity analysis. What is high for Tesla may not be high for GE. Or put another way, a high relative level for GE may be an extremely low relatively level for Tesla. Here we can see in the middle pane of this chart, our third indicator that we're not going to cover today, but this is called kinetic conviction. And this indicator is designed for this purpose, determining relevancy with deviation bands or standard deviation bands, and to assist with interpretations due to HFT, high frequency trading, or dark pool activity. So we have a volume bar, and here we see the classic chart set up with price in the top pane and volume down here. So how do we use volume? It's believed, and it's logical, that price movements on days with relatively high volume are more important and relevant than price moves on days with lower relative volume. Just think of it like a significant other, a teacher, or your boss. The higher their voice gets, right, the more volume, the more serious a meaning that the event and the message that they're trying to translate. It's a simple way to try to remember it. When we see higher volume, it's often interpreted as the big boys are coming in and that they may know something. We can see their footprint. And we see heavy relative volume for a variety of reasons, especially when there's a new unanticipated revelation about a security or a market causing a price shock. Or when we see a technical event like this breach of major support in this chart of gold at points J and K, where there was a major support breach of line ABC, and was followed by a 12% drop in the price of gold in 2 days. Technicals have relevancy, if for nothing else than the self-fulfilling prophecy of the patents and the computers that are programmed to move money off of them. Don't let anyone tell you anything different, and that's how obviously traders look to make their money. Now, expanding this theory to volume and trends, we were taught that volume expanding with price moves in the same direction of the trend is supportive of the continuation of that current trend, and these are our green arrows. And similarly, lower relative volumes in diminishing normal natural price retracements back towards the trend are also considered to be supportive of the current trend, our red arrows. And this theory is logical, it's straightforward, and it's been around for a long time. But unfortunately, and this is a key point, our markets have changed dramatically since the tools that plot and analyze volume were first developed. On this slide, we're highlighting several of the areas where things have changed. And they are legit. Our markets are more volatile. We're in a global environment. We get a lot of price gapping now, or certainly more price gapping. We have margin and leverage. There's more derivative structures and activity. We mentioned dark pools. High frequency trading certainly distorts volume. And then there's deceptive order practices, which is more advanced that we won't cover today. So if not volume, then what? Finally, we get to our term conviction. And to be clear, this is just a term that we are using. And this term in measurement has been around essentially as long as volume has. In fact, in its most basic form, the calculation of what we are calling conviction is almost identical to dollar volume, with both values representing the approximate total dollars exchanged over a given time period. Not volume, but total dollars exchanged. How does the calculation aspect of the term conviction that we're using different from dollar volume? Well, conviction uses the average high, low, close, and open prices as opposed to the closing price as per the dollar volume definition. And you can see it's just a simple multiple here. Dollar volume uses the closing prices, and conviction uses the average price of the high, low, open, and close. Why do this? Because closing prices tend to gravitate to the high and low bar extremes of the day, and average price gives us a more accurate estimation of the total dollars exchanged. And you may have noticed that I said estimation. Why not use volume-weighted average price, or VWAP, to calculate the exact number of dollars? Well, if you have it, it's better. But because most charting platforms don't offer historical VWAP on daily bars to perform the calculation. And in truth, the difference in the calculations between dollar volume and conviction dollars are essentially irrelevant. But the benefits of using conviction or dollars over volume is not. And it is the concept of conviction and some new indicators that use it that is somewhat unique and advantageous, as we will now see as we delve into RCM. This is the key slide. Here we have a single colored volume bars plotted in the middle plane and conviction dollars with the RCM indicator plotted in the lower pane. And we were just referring to as dollar volume here. Now look at point A. Here, the amount of selling pressure seems to be increasing with the volume bars on this downtrend. And because of this, we would conclude, according to traditional theory that we just covered, that the downtrend intensity is increasing and that the downtrend is likely to continue. But when looking at the actual dollar value, the conviction at point B, we see that the intensity is actually decreasing from a total of around $100 million per day to around $80 million per day from the start of the downtrend. This plots very differently. Yes, the volume may be increasing, but that's only because the stock prices during this period are less than half of what they were when the downtrend started. The stock prices during this period are less than half of what they were, again, when the downtrend started. It's creating an intensity illusion. Does this make sense? Here's another example with Tesla, where the prices dropped from $300 to $100 between the yellow vertical lines, and volume at point A, again, is displaying an increase in intensity illusion. And at point B, we can see that the selling intensity, as measured by dollars, is not increasing. If anything, it's staying the same, and I think it's decreasing, and hence we start to see the upward turn in prices. And even going back over the time with this thin line, we can see this even more emphasized. And this obviously works both ways. When price rises dramatically, we would see just the opposite. Unfortunately, this phenomenon has hurt many investors who have attempted to use volume analysis in this manner. It's not because an investor did not know the rules, but because of this visual volume skew that occurs on large price moves. That's the reason. And this volume relationship has caused investors to not buy low on a turn because of the illusion of increased selling pressure or panic, continued panic. And it's been encouraging investors to sell prematurely in a strong uptrend because of the illusion of decreasing intensity or buying enthusiasm, with the volume bars losing steam, but not really the amount of dollars behind the moves. And this is what conviction in general and RCM specifically addresses. Before we proceed, although it certainly could be argued, if these relationships are true, and I think they are, why has the industry been so slow to adjust to this changing environment? And really everything, HFT and dark pool activity, etc. And I would propose that one reason is that volume data is cheap and it's simple to plot. It's supplied directly from the exchanges and it doesn't have to be processed. It comes from the time and sales of the print directly. Other reasons, I would propose a name familiarity, in that there are established protocols with volume and it's hard to get these changes as there's no central governing agency. And compliant departments never want to change anything, as we will see with OBC in that presentation. And this is one of the major advantages of Metastock, where evolutions and adaptations can be brought to the market quickly and to keep up with the current market environment. For those that are new to volume analysis and that may have trouble spotting these key readings, we designed into RCM the Expert Advisor Commentary Reports. RCM provides written assessments and guidances at the top of the report to aid the interpretations. This one has a potential downtrend reversal, bearish price action with diminishing conviction. That's what it's telling you. And for more advanced investors, the reports also include about as much statistical analysis on volume and additionally, as you would expect, we included the plotting of the signals right on the chart to aid recognition of important readings. Here on this same chart now of Kellogg, we have multiple examples of diminishing conviction on minor downtrends and how RCM is starting to pick that up. And you can see it right here. Prices coming down, and you can see the conviction starting to lessen. We see it here, we see it here, and we see it here. And although not perfect, these primary signals, when grouped together, are effective at recognizing diminishing conviction on an established trend in a possible area of a reversal. Diving in a little deeper, what exactly is RCM looking for? This is a chart of AT&T. The primary signals, and there's two signals, I'll explain the other one, but the primary signals are the dots. Green dots show areas of potential bullish turns, the slowing of diminishing prices on less conviction. The true conviction selling pressure seems to be losing steam. You see it right here in the yellow arrow. The red dots show areas of potential bearish turns. They identify the slowing areas of where prices, where there's a slowing of increasing in prices on less conviction. The true conviction, the buying pressure seems to be losing steam, and we can see this right here with the blue arrows. We're looking for multiple RCM signals along with a flattening of price, and then if even better, after we see this, we see high conviction with the breakout. And you can see it here, right? High conviction with the breakout right here. So RCM kind of tells us, hey, something may be going on, and then we look for confirmation. RCM also plots secondary signals for reinforcing the primary direction of the trend. These appear as small pluses or tick signals. On a downward price trend, consistent red tick marks are reinforcing of the continuation of the downward price trend. On upward price trends, consistent green tick marks are reinforcing of the continuation of the upward price trend. Notice that point A right here in this magnified section of this long primary uptrend, many of the day's moves are accompanied by reoccurring green tick marks. But during the primary downtrend here, which has a beautiful reversal point at point X, it was a beautiful call, and this is on the S&P 500, well, SPY of the S&P 500. Notice how on these upward moves on a major downtrend, you're not getting the reinforcing signals. So this is a secondary signal that we built into RCM. And if you're only interested in the primary signals, you can turn these off. We've allowed you that option. Here's a table showing the relationships for price trend evaluations and conviction. And it's what we would expect, as conviction is not necessarily a paradigm shift on classic analysis theory and techniques, but it's an adjustment to the way that intensity is measured and displayed. Continuation of trend is assumed on strengthening a growing conviction, and potential reversals or a pause in the established trend is considered when we see weakening relative conviction. Now, even if you only use the primary signals, it's important to remember that RCM is best as a shorter to intermediate term retracement signal generator. And it's always used as a secondary or reinforcing tool. A trend is always assumed to be intact until the weight of technical evidence dictates otherwise. RCM alone is not enough weight to call a trend reversal signal. When aligned and combined with the other two conviction indicators, there's a stronger case for a reversal call, but any single indicator is not. Here's an excellent example of this with the Qs. We're not cherry picking stocks or stocks that are not known, right? This is with the Qs. This shows RCM identifying short-term turns, but only back to the major prevailing downward trend at lines A, B, and C. And I will say for major turns, OBC, another indicator, is probably better at that. That's another conviction indicator. We have the same chart here, and on the same theme, we have one more important guideline for effective use of RCM. One or two dots with an established trend are noteworthy, and price often continues onward when we see this. You can see them here. But it takes multiple dots for any consideration of a turn against a prevailing or established trend. And even then, again, it's assumed to only be a minor retracement back to the prevailing trend unless we see additional technical evidence. Here's another example. Now, same QQQ, but on an uptrend of QQQ, one or two dots with the trend seems like it does do a nice job grabbing these bottoms. We see the multiple dots at the true turn at point Z. And then we can see the counters at D, E, and F where we have multiple dots, but we're only getting small turns and retracements back. It's forecasting it, but it's only small. Again, we need more evidence of a true turn. But don't sell these signals short because they're very advantageous to getting better prices when we're trying to trade with a major trend. Now that you know the rules, here's a chart of everyone's favorite company to trade, Apple. Well, a lot of people's anyway. And this is without the signals and commentary report. Do you think that you see some of the signals? Right here, you can see a trend coming down, and you can clearly see RCM conviction lessening, and then we see the turn. And one element that we included in here, and I realize it's hard to see, is that we put a moving average, which is a white line, to help you can see the conviction momentum when sometimes it's hard to see. And through the magic of television, here's the signals right there. And you get very comfortable with recognizing these signals. It does a pretty good job. It points out the bottom of Apple. It grabs the bottom here. Again, it grabs the bottom here. This isn't a bottom, but it's a tracement, and it's saying, okay, again, the conviction is coming back on this short downtrend. Even the tops, it was a little late here, grabs it here, grabs it here. It's early here, but it was right. So it does a pretty good job. So in my opinion, RCM is clearly a superior alternative to plotting straight volume because of the price intensity skews on large price movements, and it has a unique ability to clarify price intensity movement relationships. But there's two other areas where RCM can also give an investor an advantage. First, RCM not only displays if the security finishes up or down, but it also adjusts the intensity of the color to reflect the magnitude of the price move. Brighter green colors highlight larger relative upward price moves, and brighter red colors highlight larger relative downward moves, right? We're showing, the color is showing the amount of the price change. And this makes it much easier to identify important events like blow-offs, which are high volume, large upward price moves, and selling climaxes, which are high volume, large down price moves, without having to constantly scan your eyes up and down comparing the price bar and the associated intensity bar. It's also good for spotting high intensity dojis. Here we have a classic blow off on top on MicroStrategy, rapid acceleration of prices on high intensity during and at the end of an established trend. And these patterns are often seen at the end of an established trend. This is not a high intensity breakout from a base or from a change of trend. It's in an established trend. And I want you to notice at point B, how volume, which is volume, how it fails to recognize this change because it's still comparing volume from the $300 price level from the start of the move down here to the $1,300 price move up here. And at point A with RCM, we can clearly see the true amount of the increase in the intensity as displayed in real dollars. The second element that was built into RCM is in this chart. At point D, we have a volume bar on the bottom this time of the chart colored green. And at point E, with RCM, we can see the bar is colored red. Here, RCM is displaying the return direction where a stock finished from the previous day's close as opposed to its open. Overnight price moves and gaps, our current market environment, account for a large portion of a stock's movement. We can see this at point F, where the stock dropped 42% from the previous day's close. But because it finished a little higher than its opening price, with standard volume bars, it's colored green. The question becomes, do we really want to color it green on such a large drop in price? The open-close coloring relationship is already reflected in the candle color up here. So we've given users the opportunity to display the colors in that way, in that manner. And unfortunately, these calculation display anomalies are not an isolated issue. In fact, many of the most commonly used base volume indicators like OBV, on-balance volume, and Chaikin's accumulation distribution have similar issues. Accumulation distribution doesn't even factor in the depth of a gap. OBV is all or nothing. A 1 penny move one way or the other adds everything and subtracts everything else. And these are addressed with OBC, which again is a better trend reversal signal generator. Finishing up here, because there is no single best way to invest and trade for every person, for more advanced investors, we've included numerous settings that can be adjusted to contour RCM to your specific style. You can have RCM plot and calculate conviction dollars or volume if you want right here. You can have it display traditional open to close or the default close to close coloring, as I just showed you. You can adjust the analysis length to target shorter term or longer term changes of trend, which will also display more or less signals, and you can control what information appears in the commentary reports. For the vast majority of investors, the calibrated default settings would probably be the best starting point, I would say, but you can always experiment and counter it to your own needs. Before we take some questions, I want to walk you through one example how one might use RCM for, if nothing else, perspective. We're going to say that an investor has been following the 6 months downtrend of Tesla right here, looking for an opportunity to purchase the stock based on their fundamental appraisal of the company. On May 18th, 2021, where we have the green arrow here, the investor sees that price is dropping back into intermediate support. The investor then turns to RCM for some supportive analysis, and that they see from a visual perspective that the selling pressure on Tesla has been diminishing. We can see it in the red dotted line, and as prices have continued to decline. This would be a bullish interpretation. Additionally, when reviewing the commentary report, the investor sees that from a momentum perspective, both the short-term and intermediate-term assessments are in potential downtrend reversal status. Based on the price action and RCM conviction readings, the investor now begins watching Tesla more closely for a positive upward move in prices. A few days or perhaps a week later, the investors feel there's now enough evidence that prices are turning, and they purchase Tesla on the start of the new uptrend. That would be an example of how we would incorporate all these different methods and elements into an assessment and how we would utilize RCM. In summary, RCM's purpose is to be used as a substitute for standard volume bars and to offset large price skew readings. How do we use it? We evaluate price trend, intensity, momentum. We look to see if the intensity is diminishing with an established trend, leading us to assume that it may be likely to pause or possibly even reverse, or if the intensity is growing and the price trend is likely or more likely to continue. As a secondary reading, we look for tall, brightly colored red or green bars, as these often begin a new trend or end an existing one. And again, this bar height is now relative and it accommodates for price skews. But please remember that RCM is best used in conjunction with the other two conviction tools, OBC, which is better at locating major turns, and KC, which addresses HFT and dock pools. And that's what the scans are primarily based off of. Of course, all of these come together, all of these indicators come in the conviction package, and we also get the 3 systems. We showed you the results of one of them. We've already set up for you in Metastock how you would incorporate all 3 of these into one shot so you have a total view. And this is kind of what it looks like. On the bottom, point A, we would put RCM for classic trend intensity and momentum analysis, and for spotting selling climaxes and blow-offs for the start or end of trends. In the middle pane at point B, we have KC, or kinetic conviction, to highlight recent moves or moves of relative significance by plotting conviction differentials over or under standard deviation bands that are calibrated. This offsets for HFT and dock pool activity. And on top, point C, we have OBC, or optimized balance conviction, that measures up day, down day conviction in a very, very different way than first generation models. And its key signals are divergences showing potential areas of a change in trend, and this can be overlaid with RCM. The more we get, the better. Complete analysis in one window, and hopefully to compensate for the new current market environment. And in the end, they're fairly easy to interpret when you know what to look for. I'm assuming that we're going to be out of time here, but please note that we're going to be covering OBC and KC in some upcoming webinars in the next few weeks. And again, my hope is that you learned something in this presentation that you can use to improve your trading or investment returns. For more information on AAI membership, the tools, the classes, or anything else, you can contact me directly at aitools@aaii.com. I thank you for your time, along with Jeff, Kelly, the Metastock programmers, and of course the entire Metastock staff for this opportunity in holding this event. That's it.
All right. That looks like you're ready for questions.
I'm ready for some questions.
All right. So here's one that we have for you. When let's say that you have, let's say you ran a scan in Metastock as an exploration, and you have a few stocks that you're kind of looking at, maybe taking a position on a few results. Are there certain things that you would look for to kind of prefer one stock over another stock if you're just looking at a scan report?
Yeah, absolutely. That's an excellent question. Whoever asked that question. Well, one, we'd like to see that particular stock show up in more than one conviction scan. That would certainly be one thing. And then at that point, you're certainly turning to your preferred technical setups, what you prioritize. Personally, I prioritize things like support and resistance, breaks, obviously gaps. Relative strength is big to me. Where the signal's being generated in overbought or oversold areas. But at that point, now your chart reading skills and your trading skills are coming in to try to fine tune the list down even more. One thing I will say is with these scans that we gave you, the systems, excuse me, there's kind of a shorter term, a middle term, and a longer term. I don't remember the exact time, but the shorter term is like 26 days, and I think the longer term goes out to about 3 months. So that's also another consideration. What is your time horizon? You know, how long are you looking to hold these positions? And if I'll add one more thing, the better the performance, the more restrictive it becomes. So one of the scans does not produce many securities at all. And then we have other scans that produce a lot more, where you would be incorporating your analysis, your secondary analysis, your chart reading into the decision of which ones to take.
That's one of the things I really do. You kind of touched on it, but that's one of the things I really like about the system is you've got one that's kind of designed towards that longer term investor, one that's kind of designed for a shorter term or a kind of a more intermediate term, and then one that's just super selective. Like I really like the way that that was put together for you. I have another question that came in here for you. We talked a lot about how you're a very good system designer. What would you say are some important things to look at if you're designing a system? Performance-wise?
Yeah, it really, when we're designing systems, it's about matching the profile or the desires of the person. I think that's the most important thing. Some people just want to look to maximize return and they don't have problems with large drawdowns. Other people do have a problem with drawdowns and they want the safest system possible, even sacrificing return. Things that I look for or that I tend to prioritize, again, but we have 3 systems here, but hit rate. I just think that when people get a high hit rate, they're more likely to stick with it. You know, when you're getting more than 2 consecutive losses, it's much easier to stick with the system. And remember, that system was buying even through bad periods of time. So I look at hit rate as important, and that 80% was baseline with all the other things that no dividends or nothing. I look for consistency of returns for the same thing. Unfortunately, I don't have them here in front of me. But if you looked at the equity return, it was pretty similar for all 3 systems. I like something that is pretty profitable no matter what the market is doing. It kind of takes out another variable. But everybody can look for different things. That's just what I look for.
All right, here's a bit of an off-the-wall one for you. Can you explain what a K-ratio is?
Well, K-ratio, in one sentence, is the consistency of returns. How consistent are the returns? A higher ratio is considered better.
All right, and then another question we have is, can you talk more about how these studies compare to kind of some of the older volume studies?
I can, and if you're interested in that, whoever asked that question, the OBC presentation, which I believe we're doing next, really goes into that. Some of the problems, I mentioned a couple with accumulation distribution and OBV. These were designed 40, 50, 60 years ago. They were designed for pen and paper. I understand why they were developed and why the methodology was, but is it really applicable now? That's the question. But the problem is they're embedded
in evaluating system performance.
Yeah, I touched on that. For me, it's very important. You know, it's very important. Some people only care about the extremes. I want the lowest to the highest over 10 years. I tend to more care about, I'm willing to give some of that, you know, for this. But that's just me. It's really up to everybody. Try to understand too, it's highly unlikely that you're going to be taking every position, you know, that if you decide to use these systems, you know, you're really going to be selective on them. And I think that's important. And the money management also. The system is going to get you out somewhat quickly, you know, because it wants to lock in your profitability. But don't be afraid to then move that profit target up and put a trailing stop in there, or use your preferred analysis method to let them profits run. That's a problem with a lot of traders. You know, they want to grab profits very quickly.
All right. I hope that's the end of the questions. Great job, though. So yeah, we have some really good ones, though. So I do want to talk a little bit more about the tool just in general. I do want to say before I kind of take the control of the screen and stuff like that, thank you for spending. Thank you for all the time you spent with us, kind of working on the tool, developing it. I really like, one of the things that I really kind of think you did a really good job with is understanding the power of Metastock. The commentaries that you've designed are absolutely really, really cool. And the scans, I'm sure we're going to have another session where we just talk about the shares proof calculator, but really, really good job in terms of what you've kind of brought to the table in terms of Metastock add-on. I appreciate all the work you've put into it.
Yeah, well, thank you, Jeff. And I do. I think it's a good match. The power of Metastock, kind of, you know, with the approach I think that we use, I think does have a lot of advantages. And again, the results, although I certainly think are impressive, don't underestimate the real true potential of the results, because we have to show them that way. But there's many, many ways to improve the results of them.
All right. Thank you very much, man. I'm gonna take over now.
Thank you.
All right. Very cool. Let me go ahead and do this. We just had to make a couple changes here so you can see my screen. And let's do this. Attendees. Okay. All right, very cool. You let me know. I'm sure the controller will let me know if there's any issues with things, Kelly. But you should be able to see my screen. And
You're good. We can see and hear you, Jeff.
Cool. Thank you. I want to say thank you to AAII for kind of the work that they've done to this as well. I know Ray works as part of the AAII, but before I kind of get into the actual system, I want to say thank you to everybody at AAII. Hugely well-respected organization. We're very, very happy to be partnered with them. You've heard, I'm sure you've heard of them. They've been doing things since the 1970s. They've touched millions of traders. They do a lot of research reports, and we're super proud of the affiliation that we've got. If you're interested in finding out more about AAII, go to aai.com. And I'm getting better at saying all of those vowels in a row. It's something that it's an ongoing struggle for me to be able to enunciate that well. But aai.com, we really appreciate all the work that they've done. So I do like the AAII Conviction Plus. I like how it accounts for kind of a newer market, as Ray was saying. It's definitely designed. This isn't your father's OBV. It's a brand new OBV, or it's not even OBV, but it's a brand new way of looking at conviction. And I really like studies that have to do with volume in general. I like the naming of it. The conviction is a really good way to kind of talk about how much conviction is beyond that move. And so Ray talked about the indicators today, a few of them, but in the package you're going to get actually a total of 7 indicators, but the ones that I chose to focus on were OBC, kinetic convection, and the relative conviction momentum. Those are all included. If you are somebody that likes to be able to tinker with kind of the settings on the indicators, all of them are tinkerable. You can go in and kind of change the variables and the look back periods and that kind of stuff. But they're great indicators. OBC is designed to help you measure if a trend is likely to continue or reverse. The kinetic convection is designed to help you understand if moves are going to be more meaningful or less meaningful, and filter out of course, the events that are less meaningful. And then you've got also in there, you've got the relative conviction momentum, and I really like its color-coded scale in terms of measuring out and showing things for you. So again, just the amount of design, the way that the expert commentary looks, the ability to scan, all of those are really, really well done. And I think when I talk to people about kind of one of the things that, well, actually, I'll talk about that in a second. Let me kind of just talk a little bit about the LT methods, the short-term method, and then the PT method. So LT, with that, it's designed for a longer-term trade horizon with an average trade length of about 82 bars. The other thing that I like is kind of the amount of testing. And Ray already showed this graph. I asked him if I could include his studies in kind of my slides too, because I think it's important that when you're trading, you understand exactly how many trades you're going to take. I do think, for me personally, equity curves are important. You know, I don't want something that's all over the place. I'm not looking to ride a roller coaster. I'm looking to trade, and I think trading should be relatively boring. I don't think it should be something that's like really that exciting. I think if it's exciting for you, your positions are too large, you're taking too much risk. I don't think it should be like a really super entertaining activity personally, right? So I do like kind of the all of the design metrics and the design expertise that has gone into this. So especially LT performance, the ST would be more of a 35 bar hold length, more of an intermediate term trade focus. And here's the metrics that you've got here: 75% hit ratio, profit factor of 2.48, 1,714 trades that are tested. And then, of course, the last one is this one is designed to be the most selective of the systems. This is something that if you want signals, you're going to have to scan for. In fact, right here, it says it's designed for systems that are for investors who are willing to scan for opportunities. And with that, in the whole test period that Ray did, we only had about 375 trades, but the percent profitable was the hit rate was 80%. Your profit factor was 3.33. Again, great. And the thing I like about this is I've got a tool called the Metastock Scanner, right? And I can go in and I can scan every optionable that's in there. And if I find something that's really selective, I like the ability to step over lesser opportunities to find better opportunities. There's 4,600 optionable stocks right now. I don't really want every opportunity. I want something that's a little bit selective. And so if that sounds like something that you want, this is definitely something you want to run some scans on and kind of take a look at. So in any case, we'll talk more about the ProofShare calculator. It's a really interesting way of looking at the market as we do more of these sessions. But the real whole goal of this actual ProofShares calculator is to design to tell you what a down day is going to look for, how many shares you should be buying based on kind of your risk. It's a really, really unique added thing. And I think one of the things I like most of all is kind of the design on this and the way that it takes advantage of some of my favorite Metastock tools. So you've got a commentary, and Ray showed a lot of examples of the commentary and how it really goes in and kind of talks about the entry positions and your projected targets. It goes into real definition in terms of what you should be doing with those symbols, or those signals, I should say, not the symbols, but the symbols. It's a very, very well-designed commentary. Of course, as part of that, and get a list of the shares that I'm interested in. I don't have to look at 5,000 stocks. I can just look at the ones that have that particular opportunity and then focus on just the ones that have an opportunity and decide the ones I like best. And I love that question that we had earlier about how do you kind of identify that? Because Metastock's really good about taking you from 500, 600 stocks to just a couple. And I do really like that question about how do you kind of narrow it down from that. So good job on that question too. So all this is a very, very well-designed toolbox for Metastock. It includes 7 indicators, 4 explorations, about 6 different expert advisors, and 7 templates. The other thing that I think is super cool is it's going to include access to the LRM portal for the AAI conviction. So there's tons of training that's going to be available for as part of it. You're going to get detailed training courses. And you're also going to get 1 year of AAII membership as part of the package, just included. So all that's included. The pricing on this, normally it's $1,497. We want you to try it. So what we're going to do as part of a launch special, this is the very first time we're really talking about Conviction Plus we're going to do a dedicated launch this month, maybe all year, probably. But in any case, what we're going to do is we're going to say here, if you buy it as part of the launch special, you're going to get $9.97 as a price. We're going to back that with a 30-day money-back guarantee. So you can try it. It's a perfect risk-reward ratio. If you like it, if it helps you make better trades, you can keep it. Otherwise, we'll give you a full refund. And so in order to take advantage of that, give us a call, 800-882-3040. You can also go to metastock.com/conviction. I'm going to go ahead and type that in to the GoToWebinar chat if you put it in the YouTube chat, Kelly. And you can order it online. If you have any questions, if you want to kind of see some more examples and that kind of stuff, we do have reps here that can actually answer your questions right now. So you can give us a call at 800-882-3040. You can go to metastock.com/conviction. Or if you're international, you can't really call an 800 number, chat online with us at metastock.com/saleschat. So $14.97 is the normal price. Here today at the event, it's going to be $9.97. Special 30-day money-back guarantee. Give it a go. You like it. And if you don't, you get your money back. But you're going to like it. And if it's something that's helpful for you, it's going to help you kind of generate good trades over and over and over again. So give it a go. It's a great risk-reward ratio. So with that being said, I don't see any outstanding questions. Let me just do a final chat. Nope. Okay. Thanks again, Ray, for your time today. We really appreciate you coming in and spending some time with us. Kelly, thank you in the control room. For those of you that are watching the video now, thanks for coming. I hope you enjoyed it. I hope you learned something. If you're watching us on YouTube in the future, make sure to hit the like. But give it a go. Metastock.com/conviction. Really happy, really proud to be launching this. Thank you again, Ray, for all your work. All right, we'll see you at the next one. Bye.